All right, what is up, YouTube? Back once again with another live video. I'm definitely trying to avoid some, doing some homework and, having to take an exam today. Definitely want to make a video for you guys, so that way we can, somewhat keeping track of the market, because I am studying, each and every week, because I do have an exam every week, taking these mini masters, to get those electives out the way, so I can go ahead and graduate. But let's go ahead and look into our account and see exactly how we're doing so far. I know Take Two is definitely up. Starbucks is somewhat up at $60. We see that we're at this $210,000 level. Last time we checked, we were at almost 220. So we have taken a severe fall of about $10,000. But what we see right here is a repatriation, or maybe not repatriation, but repositioning for stocks that were hitting all-time highs, and now they come off of those all-time highs, and now they're just sitting chilling, just about trading sideways. So we see AMD definitely, we bought stock around $10. We see this thing definitely inching up to $15, and we can go ahead and take a look at that chart. AMD is definitely a company that spikes up in price and then falls back down. But what we see here is that ever since this huge fall right here, once we inched up close to this 1391 level, we took a huge drop. That was on the earnings, and I knew a couple people that were in this, and I know a guy that's in this right now, definitely banking from, he was losing money, and I told him to sell right here at $11, because this will be, will continue to free fall because of the way the analysts and the way the CNBC was definitely talking about the stock. And I showed him the RSI, said, okay, now is definitely a good time. If you believe in this company, now is definitely a good time to get it at $9. Because if you go back in my old videos, I said I'll be interested at $9 or maybe $10 level, but I never really got back in it because of the way the earnings was portrayed and the way the outlook of the company was portrayed. But this guy definitely got in at lower prices, that he had. So he got in, I think, about maybe $9 or $10, and now he's doing about 40% on the trade. So just about holding it for 2 months, he's already up 40% on one position, and that's definitely a good way to start the year off. It's definitely a good way to have positions. So you want to be able to catch that bottom. A lot of people aren't really good at catching bottoms, and typically what they say, the analysts, they come out on TV, and this is really funny because you see it every time. The analysts, they come out and say, oh man, it's way too expensive, this and that. And whenever they say it's way too expensive, those are the people that actually missed out on buying the stock because they were too busy, giving the stock a negative rating. So whenever you hear people talk about, this stock is definitely priced too high or this and that, they're the people who are definitely selling the stock down the whole time. So we see Apple here. Apple definitely took off, and then, and a lot of people are saying, yeah, Apple's getting way too expensive right here. I was definitely one because I was reading off the RSI. But what I didn't understand is that this is definitely a momentum trade, and since I sold it all the way to now, this has definitely been a really good, perfect momentum trade. And now it's kind of killed the momentum. We see Apple become oversold at 140 just about, and that was definitely really good prices for people to go ahead and jump in the stock. Because honestly, whenever you see Apple definitely getting a sell rating, or definitely taking a huge dip, maybe even $10 to $15 off of all-time highs, is definitely a buying price, or definitely time for you to buy. Because think about it, we're looking towards the future, and if you read the future outlook for the company, you see where the dollar is, and you see how they have, quote unquote, I would say good growth, or good from good sales, according from the low dollar. They were actually making more money, and as we see right here, the dollar is definitely still down a lot right here. If we can, I think it's the US over CH. Let's see. I think this is the one. This is the dollar. Okay, I definitely don't have it right now. Okay, there we go. Okay, right here. Okay, so this is definitely the US dollar. We see it at 96 cents. So we're definitely not at $1, but we did, we were right here at that 96 below right there. And Apple reported their quarter, talking about how, they received, somewhat good sales from the low dollar. And depending on where they reported at, we see the low dollar is probably at 96 cents. And if we get, 96 cents and it probably stays here, now you can just, make an assumption that Apple's going to report some really good numbers, next quarter. from off of this low dollar. So that's just something to think about when you do, trade or maybe invest in these big names. But yeah, anytime you do see in a big time analyst or big time institution talking about, yeah, we see this thing definitely coming down, or definitely, we see it way too high, it's run up way too fast. Those are definitely just code words for we didn't get in. We didn't get in enough at time to actually go ahead and buy the stock, because that's typically what happens. Before you know it, Square is probably going to be at $30, and they're going to say, okay, this is way too expensive, because you know why? They didn't get in at lower prices, and typically that's usually what happens. They don't get in at lower prices, and they become upset, and they say, okay, we're going to become a bear on this thing, and we're going to hope it comes down. Nvidia is definitely one. This stock definitely keeps running up, but people are saying, this definitely overpriced, and people were saying it's overpriced for a while. We have people coming and short it, and some people are still short this position because they still think it's overpriced, but their quarter actually, showed the numbers that this is actually underpriced, to be honest. And we see this thing definitely climbing up higher. So people who keep saying overpriced, those are people that actually missed out on buying the stock. And that's typically all it is when we can think about it. Berkshire Hathaway, definitely, we're coming back to this $165 level. We see it at 171. Typically, I wanted to get in before the banks start to rally, because we do see those interest rates coming into play later on this year. And I know banks and the banks, and this will be I would say maybe somewhat portion of Berkshire Hathaway's position. I don't know the exact percentage amount, but I do know he will benefit from those interest rates going up, because he does have invested interest in banks. So I want to be able to take advantage of that. Go ahead and get some stock in in the company, and definitely ride this thing up, because interest rates are definitely going to go up, and this stock definitely follows the S&P 500. So if you can just follow S&P 500, you're definitely going to be doing you're definitely going to be making money regardless. So we see Chesapeake right here. I would say for Chesapeake, if you are looking for a long-term oil company, looking for something with high volatility, Chesapeake is definitely one. We see it definitely making higher lows, and that's typically, you see stuff like this. We see a jump up, and then it comes down a little bit. We see it jump up, but it wasn't as strong as this, jump right here. So that tends to be a top on the stock, and that's typically how you got to look at when a stock climbs up like this, and it, kind of reaches a peak. We can call it a top, and once it falls back down and comes back up, we've met a bottom, and that's typically how you find your top and bottom in stocks, and that's typically how you want to calculate or mark your price lines for the stock. But we definitely see this thing coming back to this $3.93 level, just about. We're seeing lower highs, and that's definitely a negative sign, because oil is definitely falling down even more. I was really bullish on oil. I still am, but I'm really puzzled to where oil, the oil prices will be at by the end of the year, because we're at the low 40s. I thought we might see a huge bounce here. I almost forgot the oil symbol, but we see exactly what's going on here. Oil back oversold. We already know exactly what happens when oil's oversold. Oil bounces back up. We've seen it time and time again. We see oversold signal right here, bounced up, close to over signal, double bottom right here, bouncing up, oversold right here, bouncing up, oversold again, bouncing up, rallying hard, oversold once again, bouncing up, and oversold right here, bouncing up. And I'm hoping you guys are definitely catching the pattern I'm trying to draw here. We see the chalk and oscillator showing us that the buying momentum is to the upside now. So now oil probably will hit $45 here. It might hit $45 and maybe top out. But we do see that the momentum is coming back. The buying momentum is definitely coming back in for the oil sector, for the commodity sector. So there's definitely something to take a look at. Definitely do your research on that before you actually go out there and start to buy the stock. So we see Disney definitely falling back down. Home Depot falling back down. What we see is that analysts are saying that Home Depot ran up too fast, and I think they came out with some numbers here. But I would say Home Depot may be overpriced for some institutions before they actually come out and buy, because, like I said again, once these things run up too fast, you're going to have some big institutions that missed out on the name. They're going to come out and say this is overpriced, which is going to drive the stock price down. When it drives the stock price down, they're going to start to buy stock, because it lets us know that the stock is definitely at a discount. They see it as a overpriced, 160 is overpriced, but I'm pretty sure whenever they get in the stock and it goes to 160, I'm pretty sure they won't say the stock is overpriced at all. They're going to be saying, okay, this stock is definitely underpriced. Let's keep this thing going. So, and we're definitely going to get to, another name here. We see Domino's Pizza. What happened to Domino's Pizza? How did you miss out on Domino's Pizza? We see an article get put out right here saying Domino's Pizza will definitely miss on their earnings just before the earnings came out. We see the huge drop in the stock, which created a just about an oversold position. Chalk and Oscillator rated perfectly, and we see the Chalk and Oscillator showing that the momentum has been in the stock for a while and just kept bouncing and off to the right, just like a home run. So what we see here is when people saw that, this thing was definitely becoming oversold because of the overreaction. So people gave out an assumption that Domino's Pizza would do horrible. So people already have that in their mindset. They're going to be they're going to remember that. So when Domino's Pizza reports good numbers, that's when the stock flies up because it comes out better than expected. And people are going to say, oh, wow, Domino's is doing really good. So, I would say the article kind of morphed people's perceptions to what Domino's Pizza was going to do. But I would say it worked to Domino's best case because, people were definitely doubting them from doing really good in a bad situation because other pizza makers were doing bad. So Domino's Pizza definitely soared up past that $200 mark, and we definitely see this thing going higher. Like I said, guys, we see it. We've seen it at 175. I told you, I said, we go 175, we definitely go into 200, and now we're looking at 220 just about, and the stock is definitely looking like, it won't go down at all, and that's definitely what we want to look at. We see Novacure right here, definitely on TV screen. We see tremendous growth for Novacure. Yeah, I'm pronouncing it right. So 149% in 3 months. And when you invest in biotech, these things are definitely, I would say, somewhat dangerous because you really don't know what exactly is going to go on. What's the next step for the company, if the company is going to get those trials. Anytime a company does fail in trials, the stock definitely gets hit. Maybe since the company's stock down 40-50%, we see exactly what I mean right here. But this is definitely on earnings. We see, leading up to earnings, the stock definitely fall. So anytime the stock goes down towards earnings, we know that the perception is, definitely negative. And if the stock definitely does do negative, then people were already expecting we're going to have an effect like Anadarko Petroleum. We see the stock get hit. The stock got hit because of, the explosion. And then, you had a bad earnings, and that just sent the stock, way oversold. And ever since then, we broke a technical low, and the stock has definitely just, kept falling. So technical low will probably be right here, and this definitely starts the downtrend. So we see a downtrend just about happening all the way through the stock, and we might see $40 if we break this $45 handle. And, Microsoft, we see Microsoft definitely breaking out to the upside, which is really surprising because Microsoft, was really a boring stock at one point, but now we see Microsoft definitely climbing up. We see $70. We might see $80 this year. This is definitely an investment that you might want to look at because we does pay a steady dividend. We see an increase in in the dividend, 36 39 cents, and this might be a dividend stock for you. This might be a long-term investment for you, but definitely there's nothing wrong with having dividend stocks. As long as you have some dividend stocks, as long as you have some growth stocks, you will definitely be fine. What do I mean by growth? We see Take-Two, video game company. We see them expanding, going out and starting to make money off of the video game players in the e-leagues. So e-leagues are definitely, big because a lot of people are playing games for money. And, we're just definitely having tournaments, video game tournaments for money. And we see right here, bets on basketball for esports opportunity. So when we hear the word opportunity, that's a growth. So long as the company keeps going on finding different growth ways, you've definitely invested in somewhat of a growth company. We see Starbucks, still a growth name. We see them trying to open up, I would say, businesses in Jamaica, growth. So we're seeing more growth. And we see Square going out, expanding their business overseas, growth, opportunity, more growth. So anytime you definitely, you see a company that's trying to expand or jumping on any opportunity, we definitely know this name or this company is definitely looking for growth, and it might become a growth name if they're able to capitalize on that opportunity. And I know a lot of companies like such as GE, you can't even, you can't really say that, it's a growth name because we see the stock, but if we see the company definitely, if we see the company definitely moving up, we see the stock price definitely moving up. That's definitely a green signal for a growth name, and we might want to keep investing in that name as long as the growth continues. Now, if they start to slip up and the growth leaves out the door, that's typically where we want to, go ahead and press the exit button and probably take some shares off of the table and take our gains because, that growth maybe be stunned for a while. We see Honeywell definitely more of a growth name than GE, and we see exactly why. We see the share price. The share price definitely climbs up. We see, from those earnings, we see Honeywell definitely does have negative earnings from those huge gap downs that we do see. But, so far, definitely been a benefit of the Trump trade. And if we do get that border adjustment tax, and I think I think some of the Trump policies might help this company out if they are able to be passed. So we want to pay attention to that. So there's a lot of opportunities in different companies. As long as we know exactly where the growth is, there's nothing to be worried about. So if we invest in a Novocure and we're saying, okay, I can sleep at night because I know exactly where the growth is. So you're gonna have to, show me exactly where the growth is because pretty much, this thing has been dead silent for a while. We go back 3 years, we see $30 at the high, and we're still 50, just about probably 40% from all-time, less than 40, I would say 40% from the all-time high. And you're gonna have to show me where exactly the growth is. We might see a turnaround in the stock price or maybe in company, but I don't see the growth here. You might be a new investor for this company, but we do see the all-time high for this stock was at $30. And I typically want to stay away from for stocks that were at, let's say this company stock is at $100, or we can say, we can say Kim Moore's. So we see that the company stock is at $36 now, definitely taking a hit, but it really doesn't matter because we're looking at growth name. We see momentum to the downside. Momentum to the downside is pretty good because most of the time this thing is overbought. So we see $20 was definitely the all-time high, and this is how the company IPO. It was a split from Dow DuPont, I think, and we see the company stock definitely hit a bottom of $33. Now, I want to know exactly what happened to the company stock that made it go from $20 to $3. And once the company stock hit $3, for some reason, people said, okay, the stock is definitely done here. From $3, it went to $46. So I want to know exactly what happened to the company. Was there a huge turnaround? So you want to be aware of these things. You don't want to make sure that you're looking at this flip side. So you don't want to be saying, okay, the company stock is at $46. I bought the stock at $3, now it's at $36, or maybe the company stock is at 40 or 46, and I bought it at $20. Now the company stock is hitting $3. I don't know what's going on because you aren't investing in growth name. If a company stock is definitely losing money, and you're most likely is going to be losing investors, which means that the company stock is definitely going to continue to fall. So I'm not really sure what happened with this dip here, but I'm definitely aware with about the run up that happened right here. So UPS is hitting $110. UPS. So we see UPS definitely taking a huge dip right here, and I was kind of trading this name around here. I really like UPS, but I know FedEx is definitely the better company, and we see UPS definitely going higher. But what you need to pay attention to. So if I watch this, UPS is up, so that means FedEx must be up, and that's typically how it is because we know that these stocks definitely trade in groups. So if one group is up, you already know which name from that group is up. So we see, let's check out Ulta. Ulta is up. Let's see ELF. ELF is down. Let's see Estee Lauder. Estee Lauder is down. So we know the makeup companies are definitely taking a hit. We only know that Ulta is definitely the only one that's up, and Ulta is barely up. So we know exactly what's going on here. We know the makeup companies are definitely 2 out of the 3 makeup companies that we did see were down, and we see the one that was up is barely up by 68 cents, and this is definitely a $200 stock. So it lets us know that there's not a lot of buying going on for this stock. So let's check out Let's see, Apple. Apple is up. Let's check out Amazon. Oh, let's check out let's see, Skyworks. Skyward Solutions. Skyward Solutions up. Definitely check out the relationship between Apple and all of its business partners that help the iPhone come together. So anytime we do see technology stocks up, we should already know which ones should be up from the reputation and how their quarter has been reported. So we see Square up. Let's check out another. Or Square is down by 4 cents. We see Visa is up $1. We see Mastercard is up $1, and American Express is up, and it's barely up. So we see Square is definitely the only laggard in that group, but we do see that the market is definitely, it's kind of, I would say, rocky. We're barely trading a line here, and what we need to pay attention to is just definitely those groups. If you're able to start grouping up stocks and understand which stocks are up or which stocks definitely turn hot whenever the market turns hot, that'll definitely lead you to those growth names that you do need to be invested in. But showing you exactly, what I mean, we see Take-Two. Let's see, Take-Two is up. That means EA Sports should be up. EA Sports is down. Let's check out Activision. Activision is down. So we see that 1 out of 3 big video game makers are up, and we see they're barely up. We see EA Sports, they're barely treading any water here, and Take-Two Software is definitely the one that's only showing a little growth here. And we see that these video game makers are definitely hugely overbought, but they are off of their all-time highs. So we see Take-Two $6 away from its all-time highs, EA Sports $4 away from the all-time highs, and Activision Blizzard about I would say $1, less than $1 away from its all-time high. So we do see that they do move in groups. I have made a video on it showing you exactly that these stocks do move in group, and they are able to trade at the same time. And I would say if you know that video games are rallying, you should already know the three that are probably showing a huge sign of rally. We see Take-Two, definitely one that can be up $5, $6 on any given day. Also, EA Sports probably going to be $5 and $6 up on any given day. Activision Blizzard will probably be up about $1, maybe $1.50 on any given day. But we need to see growth in those names. But we do see that the companies are definitely off of those all-time highs. But if you are invested in growth, there's nothing to be worried about. As long as the company keeps taking different steps to invest in growth names and invest and make sure the company is definitely doing better year in, year out, each quarter, you're definitely in a good sign. We see Johnson & Johnson. There's different drugs that are going to come through the pipeline here, and we see 137 definitely the high for the year, and that's just about it. Adobe is one that just keeps running up. I want everybody to pay attention to Adobe Systems. This might be an investment that you might need to make. We see it doesn't pay out a dividend just yet, but we do see that holding the stock was definitely rewardable for long-term investors. But I would say that's about it. That's all I have for you guys for the video. If you guys have any stocks you want me to check out or any investment that you want to check out, just definitely comment at the bottom of the video so we can definitely get to that. That's about it. I really don't want to take this exam, but I'll have to do it. I'm trying to avoid it, the best chance. But we see, let's go back to the portfolio right quick. We see Twilio. Twilio is almost at $30. Twilio is almost at $30. Remember, it was at 22. Twilio is almost back to $30. So we're back. We're back about to hit that $30 top. And typically, what the stock is doing is trying to reprice itself. So now we might hear good news on something, and we might break out. So that's definitely interesting to see that this company stock is definitely inching back up to $30. We see it try $30, 3 times and get knocked back down, but now we're going to try $30 a 4th time, and I'm not sure exactly where the stock is going to go if we're not able to break out at a $30 top. So it's definitely an interesting point. I would take some gains here, but I definitely want to see exactly where the stock is going. I bought, anytime I do buy these stocks in my portfolio, I do see these stocks as discounted prices. Lululemon, we're up at that $54 is definitely reached. But what we see is that the market is definitely, kind of toppy here and kind of, trading with the line, and that's simply not where we want to be because that slow growth and it kind of slows down your portfolio from seeing that growth. But in all, we definitely have some really good names here. Take Two, we're up about $600 on that. Triple Qs, we're up about $1,300 on that because we do believe the Nasdaq will be higher, and we're gonna bet with leverage, and we're gonna get paid. We're gonna be paid handsomely for that. So that's all I have for you guys. Like I said, if you have any questions, definitely throw them out in the comments. So take care.